Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 2nd. Michael Boutros here with you this morning. Good to see you, Mark, Nick, Peter, Pooja, to start off a new quarter, new week, and new month. So we'll go over a quick review of where we stand on the dollar index. It did top that 93.60 threshold overnight. You saw it quickly fizzle out. We talked about the possibility for 94 last week after we broke the monthly opening range and monthly open. So we're poised basically, not trying to call a high on this, but we're certainly poised and looking for some exhaustion signals. And that same sort of premise actually holds across a couple of dollar crosses. So we'll look at those today as well. Where's my pen? First off, we will do DXY. We'll take a look at dollar CAD. Obviously, if you're holding the swing trades, we just missed the stop by like 2 pips. So better lucky sometimes than skillful. We're still in that one. We'll talk about Aussie on the back of the RBA. There's really nothing exciting happening there. It's still holding near-term support, possible for a dribble lower, but I'm looking for a near-term rebound. And we'll give you a quick update on the pound Aus, which did see a real nice downside break of that level that we were talking about real early in the week. Then last night's update, we'll go over pound CAD, and pound yen. Took a real nice look at the crosses for the sterling. Broadly constructive on the pound. Now, there's different pairs that you want to kind of attack more aggressively than others, in my opinion, just because of the technical clarity. But the premise being that we're looking for an exhaustion low in the pound as well. So that's sort of the idea there. And obviously, we take a look at gold. Any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board at any time. Hey, Gary, Ziad, great to see you guys in the room. All right, so first things first, here's what the index looks like. 93.50, 93.60, you had that parallel, you had the June low day close. That's this region right here. And we talked about the fact that, again, if we go back to the update from Sunday, the fact that if we saw a break higher, we could see 93.50, 94 in a hurry. And we're kind of getting that run right now. We saw 93.50 before the end of the week last week, and here's the pop higher, just turning sub 94. I think the high was 93, 92. Okay, so we're kind of probing into some areas of interesting resistance. Again, I'll bring your attention to just a larger scope picture here. The median line coming off the highs, the 236 retracement of this year's range, and obviously the swing highs that you made back here in August. All converge right here. So a good area for this thing to find a little bit more of an exhaustion high near term. Okay, and again, the intraday chart, we'll go back on the near term. Even that, some strong divergence as we've continued to make higher highs in price and a series of lower highs in momentum. Now, what's interesting, or a little concerning, I should say, is that when you broke higher, look where we just found support, 93.50. So if this is a break of resistance, test to support, you'd expect this thing to possibly stretch higher. Not my favorite scenario. I am looking for a little bit more of a break to the downside, but if it does, you still have that 94.08, 94.20, which would be a 1618 off the low, to look for some sort of exhaustion spike. And again, that would sort of take you right into this region, the longer term median line. So the possibility for a little bit of a stretch higher in dollar index, again, not my favorite scenario, but certainly we have to stay objective and above 93. Don't get too comfortable on any short dollar exposures just yet. Okay, this is just a clear-cut rally. We're looking for signs of exhaustion. As it pertains to dollar CAD, obviously, if there are any other questions on this, let me know. Hey, D, good morning to you as well. I see a couple people still dribbling in. So if you have any questions on DXY, speak now or hold your peace, at least till tomorrow. Looking for, that last breath of exhaustion. So as it pertains to dollar CAD, which is something else that we covered on Sunday, daily chart really had cause for us to be looking for some resistance. We talked about these slope lines many, many times, so I'm not going to go over that again, but a region of which if you're going to find some sort of initial pullback, that's kind of where you want to see it. We're flirting You know what I mean? You're not getting the break and acceleration, so I'm not counting it as a breakout. And at the same time, you're not getting that snapback. So, on a condition like this, and you're just opening up the month, you're just opening up the quarter, you kind of want to just be a little bit more cautious. So, we're holding shorts. Again, we just missed getting stopped out at overnight trade. If it moves higher, 26 is really, there's nothing until that level. Okay, you're talking about basic channel resistance. You're talking about the 764 retracement of the entire decline. Again, not our favorite scenario. Our favorite scenario is that this thing holds the weekly opening range maybe for a little bit more lateral sideways movement, then breaks down. Ultimately, 24.15, 24.20, the same level that we targeted on the way up, would be the support level that needs to give out to mark reversal, or at least resumption, let's say, of the broader downtrend. My interest as of now is just for a drop into 24.20. Okay. If we break higher, again, there's nothing to stop this from like rallying into 26. So Jamie was right on with that stop. That's exactly where we wanted. And if it gets any higher than that, you're likely to see another 60, 70 pip run to the upside. Momentum is looking good. You've been getting divergence into the highs for the week. So, it is vulnerable. If we weren't already short, I'd still be looking to stoke out short entries for sure. It's just hasn't been able to follow through just because the dollar has kind of been grasping still for air here. So even since the Friday high in momentum on the 120, higher high, equal highs in momentum. Take it even deeper into a 60, and you can see that divergence even stronger. So it's vulnerable, it might have one more hurrah. I hope it doesn't, but if it does, it does. Look for 126 for 126.10 for possible resistance. A break of the monthly, I guess, and weekly open at this point takes you on that trip down into 124.15, 124.20. So levels are pretty well drawn at least, while the momentum, or at least price action, doesn't want to see much follow through. Any questions on the loonie? Big player, and why I think it might also see some kind of drift action here into the end of the week, because that Friday combination of the U.S. non-farm payroll release and Canadian employment, and on a miss on one and a beat on the other, or vice versa, can really see some adverse moves in this pair. So I love those Fridays when it's double whammy employment print. The one caveat here I would just denote is that we are expecting U.S. non-farm payrolls to come in like crap. I mean, their last expectation I think was 56. Okay, they revised it up to 80,000. Now I'm sure there's going to be a lot of revisions on this based on the fact, or the expectations were softened based on the fact of the hurricanes, and what could that have for implications for the labor force in general during that time period, and is that really going to take a hit? I think 80 is kind of I don't know. You know what? I have no opinion on it. I'm not even going to try to guess. It's going to be completely variable. We'll see if this hurricane impact really hits the numbers that hard. If it does, the only thing I wanted to say is the caveat is heading into non-farm payrolls, we're already expecting a crap number. So that leaves room for an upside surprise, which does put the risk for kind of an exhaustion spike in the dollar. So ideal scenario is we start to get some dollar drift lower. If NFPs come out stronger, you get a dollar rally, which fails ahead of the highs that we made earlier in the week, and then try to play that lower. So that's kind of what I'm hoping happens here in dollar CAD, is that we kind of dribble sideways to lower NFPs, even if it does give us one last hurrah, kind of fails out, teeters out, and gives us that move into 124.20. So still a big week for dollar CAD. If you're not in any positions, there's nothing really compelling to do anything right now. If you're holding this short, again, I would have it right up against the high. So again, Jamie's level is right on point. If it gets through that, it's very likely we'll see a run into 126.10. Aussie, any questions on Loonie before we move on? Let's see if this baby can't turn over. She looks tired on all different time frames. Momentum on the daily chart, even scratching the surface of 60 here. Remember, in downtrends and strong downtrends, we want to see momentum hold below 60. So this is the first real test that we've seen since the highs that we made back in May. And certainly if it does hold that 60 mark and turn lower from here, it would be a real nice development and further sort of another factor giving us a little bit more of a downside bias on this. Okay, that is number 2. Dollar CAD. Aussie dollar was also something that we covered earlier in the week. We kind of I was a little excited about this specifically ahead of the the RBA, just because, it's at a decent level. Maybe a stab lower to 77, 78 was on the table, but I was looking for an exhaustion bounce here. Inevitably, Aussie dollar has certainly turned the tide and does look to be a little bit more of a bearish trade here, but looking for entry, right? Looking for that relief rally to give me an entry to get back on the short side if possible. So you got the move lower. It tested that's 1618 extension many, many times. And here's what Aussie looks like now. Let me zoom this out to the 240. Just give you, not that one. Okay, so that's where we started the week. We dropped into this kind of zone right here. We're marking some divergence into the lows. RBA wasn't able to really charge a break below. It was quickly retraced, and you're still kind of in a chop fest here. So a little bit of a recovery, dollar pullback at resistance. Yeah, that could be kind of sweet. I'd be looking to re-engage this to kind of get short or to get entry on the short side. Jamie has an entry at 78.90. Excuse me. So again, kind of perfect level here for if we were just to rebound higher, get into that 236 retracement. I have bearish invalidation at 79.20, so as long as we kind of stay below that on a recovery, I'll be looking to fade that, move to the downside. So interesting level. I'm just kind of frustrated with near-term price action. There hasn't been really anything to work with. Here's what the 120 looks like. And then even if we get into the 60, not much compelling price action. Real tight range. So again, start of the quarter, start of the week, be patient. We'll get some clarity on a directional break here for sure, I think, soon. Nothing really compelling for Aussie until we get into tomorrow night. We do get retail sales, advanced retail sales data, if I'm not mistaken, from Australia. So that's something you'll want to be on the lookout for. Till then, watch this support zone in 77, 78. Look, if you look on the daily chart, why that level is important and why I've kind of been scared to get any type of short exposure beyond this is this. So you're looking for the highs that you made here in, what was that, April? Okay, we just broke below that. The 1618 extension, that's obviously at 78. We dribbled below that, but we're trading there now. Then you have the swing highs here from late 2016. The November high comes in at 77, 78. Just below that, the 100-day moving average. Just below that, the 2016 high day close. My point being, guys, is I don't want to be taking fresh short exposure when all the support is kind of stacked up right here on this swing. Yeah, it's bearish, but I need a fresh entry. I need a little bit of a rebound or recovery here to get back on the short side to inevitably tag, ideally 77.35, but near term, that would be my first target. So hopefully we can get a little bit of recovery to get a better entry, because if we take a short from here, we're just chasing. And on the downside, be very mindful of these downside targets. I'd be looking to shave some off, both at 77.78 and 77.35. Questions on Aussie. Look for the recovery to sell. If you're already short, again, an area here I'd be very mindful of, and I'd be looking to shave a little bit off the table. If you break above the weekly opening range high, you're likely to get that entry we're looking for near 78.90 or so. Okay, that is number 3. Next up was an Aussie cross that we looked at which actually panned out really well. The pound Oz trade from Sunday's update. Here's what it looked like earlier in the week. The whole premise of the trade was that the rally was coming into a major resistance target. You were getting divergence in momentum, or I take that back. There wasn't real divergence, but the momentum signature pulled back below 70. So you got a short signal basically in momentum. And you were checking the yearly open resistance at 71.19. Certainly had a key 618 retracement of the decline off the yearly high. That came in right in that zone. And then you had the upper parallel, which obviously we did see through, a run through earlier last month, but price was still holding below it. So the risk was for a little bit more of a drawback to the downside. I do like the broader upside of this trade, but resistance is resistance, right? And you're going to see interruptions of that. So on the near term, again, price action was opening the week just below this region. Downside break, you're looking for initial targets just above the 169 handle. Here's what pound Oz looks like now. Okay, so the daily chart first. Obviously, that held as resistance like key right early in the week. Here's the drawback. We haven't seen 169.07 just yet, but certainly we're well off the highs. We're 100 pips off the highs already. So I still think you do look lower near term. Even if you do get a recovery in price, the initial price action does look pretty good for a little bit of a draw lower. Here's what it looks like on the intraday charts. Okay, 4-hour chart further highlights the monthly open, weekly open, just above that. Boom, to the downside. Recovery was pretty pitiful. Nice high swing there, hold. So I still like a move down into 169. 169.07 is where it is. 169.10 is where the limit is. So whatever. Just a move lower from here. So if it continues to dribble down, we'll take that off. If it moves higher again, stops our break even. But look, if it breaks through this, you still have to deal with that longer term trend line resistance dating back to the highs you made. What was that, the yearly high? From 2015. From 2015, 2016. So it is only a two-line or a 2-point trend line resistance. So again, 2-point speculative, but something to be mindful of in a possible reaction. If you see that through, you could just kind of rip through these targets real quick. So first things first, let's see if this drawback has a little bit more downside to go. Broader bullish invalidation for my mind is 67.30. So even if this were to break down even more to the downside, I wouldn't necessarily be looking to play that. But this is sort of where I'd be looking for a larger hold for support, possible entries on the long side to get that break. First things first, let's see if we get 169 here on this move lower. The 120. Bring down that bullish near-term invalidation to the highs that we made for the week. And again, here's what we looked like earlier, and here's where we are now. Questions on pound Oz? So now that we've touched on the pound, let us jump into last night's pound update extravaganza, where we covered all the pound crosses. We started with pound dollar, pound CAD, and pound yen. The premise being, D saying, can we please have a look at dollar yen when you have a chance? Yes. I don't have anything that I'm currently in dollar yen, but I'll show you what I got. Dollar yen for D. I got you. The British pound. Here's what it looks like on the here's what it looks like last night. Look, the premise being we like the pound constructive. We've talked about this. Yesterday on Daily FX, you might have seen I published a piece of just weekly charts. It's always good to reflect sometimes on the broader picture. We went over this in the webinar as well. But remembering where we are in the pound in the broader scheme of things, guys. This trend line resistance break off the 2014 highs is legit. We should be looking for some support, basically maybe a little lower from where we are right now. If the consolidation break of this consolidation pattern was legit, we sort of be looking for support a little bit lower from where we are right now. You know what I mean? Everything points to look for support. Even if it kind of breaks down lower and touches the lower parallel in that scenario, okay, that gives you another basic like 200 pips to the downside. you're still within the confines of this ascending slope. So for me, not really interested in playing the short side on pound dollar per se. Now there have been a couple of different crosses, one of them being pound Oz yesterday, obviously, and even pound yen, where it does look a little bit appealing. Where I'd like to take, possibly a hedge if you're looking for a long position on pound, but you do want to kind of take a stab at the pullback on some of the other crosses. Pound dollar, though, we're coming into an area I want to find some support in sterling. Okay, so the weekly chart, very, very objective. Sometimes it's best just to keep your chart or to take a look back and get as objective as possible. Basic trend line support and resistance has us looking for something right about here. Now, on the daily chart for the pound, okay, you're coming into a basic fib, and that is just a basic 50% retracement of the rally off the lows that we made here in August. Just lower, which is why I said even if it breaks just lower, you have 131, the key 618 retracement, which converges on this line, which I believe is the 618 line. Yes. So another fib overlap, 618 retracement and the 618 line converge down there. I don't know if we get there. And again, the pound is not the thing I want to try to press on the short side. At the same time, you don't want to try to catch a falling knife, guys. It's just not conducive to proper or good trading habits. So what's your point, Mike? Are you just basically pointing out that we can't do anything? No. What we're looking for is a reaction, and as I said in last night's update, I want to see what happens at 120 at 132.16, and we're coming into that zone right now. 132.16 is that 50% retracement we looked at on the daily chart, but also on the near term, you have a couple of different considerations. Basic trendline support off the lows from the advance from August. Boom, boom. That's right there. Just a little bit lower, right into 132. 50% retracement. We already looked at that on the daily chart. With a near-term trade, basic slope, a parallel there. Well, that held pretty good. A parallel extending off the low, held pretty good, more or less giving us a resistance zone of the 132 handle into 132.20, which is basically where we are now. So, not clear-cut divergence, but certainly divergence nonetheless. And it looks primed. I want to see if we can find some sort of reaction here in a U.S. trade today, or maybe into the close of Europe, where you do find a defense of 132 to finally give you that rebound higher. Now, you're not out of the woods yet. We're not looking for resumption of the broader uptrend. The initial play for me would be just into these slope targets on the upside. You do need to clear the monthly and weekly opens, which basically come in at 133.93. So there's a lot to look at here. I do not want to initiate any new shorts for sure, not on pound dollar. And at the same time, I do want to see some exhaustion price action here. So, excuse me. So what do I mean by that? When you look at near-term price action, you want to jump in. You want to see a low and a series of higher lows and a series of higher highs, guys. It's that simple. So I want to see this thing stab lower, rally. I want to see a defense of that and a failure. And on that low, when we start to rally again, you take the stop against the low and you try to play the recovery. But I think the levels are pretty well defined. Okay. Now, in the event we break sub 132, if this thing just completely collapses, there's nothing to stop it from basically 131. There's a soft target here at 131.58 I have for you guys, but basically you're looking for a drop into that zone here. Okay. I know some of these trades might seem a little wishy-washy as of late, but that's how we have to be at the start of the month and quarter and all this good stuff. We have to be very, very nimble. Looking for exhaustion on pound. Questions once, going twice. That is number 5 on this session. Number 6 is sterling CAD, another one we looked at yesterday. Very interesting setup on where we are for the broader trade. Here's the daily chart. You want to talk about ranges. This thing's as range bound as it gets. And I also thought it would be a decent hedge if we are holding shorts on dollar CAD for the long side of pound, which would be a short CAD position. Why can't I find pound CAD? There it is. So here's what it looks like. Real basic on the daily chart. Okay, you've been stuck in a zone here for the last, I don't know, 4 weeks or so, 3 weeks almost, basically since mid September, between 165.24, the bottom end of the range, and then the upper end of the range, which we just tagged, I had at 167.95. But look what's going on here. You have the 618 retracement of the decline. Initially, that's something you'd be looking at for support. I wouldn't really be paying too much attention on the way up, but we're still, we never compromised that low. So on the way up, once we broke, it's been offering clear-cut support. Just below that, you have the 2016 low day close. That was achieved here back on, October 7th of last year. On the upside, the 50% retracement was perfect resistance. Right slap in the middle of that range, you have 200 and 100-day moving averages. This thing is ready to pop. So for now, respect this range. This is an obvious breakout. We've been favoring the long side of pound CAD for some time. If we were to pull back, you have some nice areas of interest where you'd start to look for reentry in the long side. The way I have it set for the intraday is that, this is kind of what you want to look at. We're in this ascending median line formation, or at least the parallels look decent. We don't have too much play, off them just yet, but they look decent. The point being is that that near-term support level that we just talked about on the bottom end of that range converges on basic trendline support here. So if we break lower, you have a soft target at 63.55. This is where I'd start to look for, re-entry on the long side. 62, 62.07. You have the February swing lows from way back here, and then you have the 618 retracement of the advance off the low. Okay. Now, hopefully, if you were to get the break, you'll have some structure to work with that'll further highlight when in time you want to be looking for that. All things held constant, guys, it's a breakout with the pullback testing support. I'm not making any assumptions for the break. I want to see what happens right here where we are today. Specifically, if we open the U.S. trade market and this is defended into the U.S. Open European close, that would be a nice indication maybe that you are on your way for a nice little rebound to the upside. Target should stay inside this range until we break it. So I wouldn't be targeting anything northbound of 67, 65 for now. Top side targets are pretty clear if we were to get the break. But right now the focus is on a defense of this near-term support. Questions on pound CAD. Interesting cross. Comes into our view only a couple times, a quarter, but from the daily chart and where you are, I think it's a really interesting, really interesting range. Okay, that is pound CAD number 6 and pound yen. You guys, I'm not sure. I'm not sure if someone here in the room was in the webinar yesterday and got me all interested and hot and bothered here about pound yen. If you guys recall, we did highlight this resistance region and we flew through it. We came right back below it. Classic sterling throwover, and the pullback still sort of in focus. And I think this one is the one where I'd like to see draw down a little bit more than where we are right now. Now, here's the thing to look at, and this is what I brought up last night. On whole, basic, we're at median line support. Okay? The pullback may be a sweet a bull flag, which means basically we should be looking for the upside break of the upper parallel to really fuel the next leg. But near term, if we were to break lower beyond this, a basic 2 equal legs down correction would take you down into 148.50. You also have the former swing highs from back here, 2016 December high. That's 148.42. And basic channel support is down there. So my game plan was if we were to see a downside break, I'd start to look for some exhaustion. Want to stay constructive while above 47.60, 47.68. Again, the daily chart really highlights that region. That's this zone. You have the high day close from back here in May. Again, as we said, the December highs from last year. That gives us this whole zone. And that's why as we get into the upper part of this zone, I'd start to look for some exhaustion lows down here for entries on the long side. So how I would play this, either a breakdown here for longs off this mark or a break of the weekly opening range high. Objective would put me back on the constructive side. So within this range, kind of don't want to do anything. It's way too early to make any assumptions, but I do have clear-cut levels on where I want to operate if we do see a move. And again, it's either a topside break here to buy pullbacks into 52, 52.80, or a downside break here to look for some long entries into these levels. Questions on the Widowmaker, pound yen. She's a big swinger, so once she starts making a move, it kind of finds doesn't give a respite for quite some time. So kind of hoping to get some sort of exhaustion spike low like this into one of these regions would be sweet. If we get the breakout, so be it. Okay, that's number 7. Last on my list is gold. And then we'll jump into your questions. So if you have any questions, please feel free to throw them on the message board. Here's what pound yen, by the way, looked like last night. All we've done is made a small rebound off this level, off this trend line again, and we're right back where we started. So we really haven't made much progress on this in overnight trade. Again, we can't see. Let's see if we can't get this moving as we open US. Gold looks like this. Not really much to update as far as the levels that we highlighted earlier in the week. Here's what gold looked like into the start. Or into the close of last month, into the start of this month. So what we wanted to highlight last week was this. The descending channel formation has kind of still been on point and certainly had the risk for still a move lower down to 1270. And the bearish invalidation level was dropped. Well, let me take that back. We had it at 1304 early in the week, and we saw a break of that, which I thought was going to clear everything because we were working with this trend line at first off of these 2 points. So when we saw that break, it broke 1304, quickly fizzled out, right? Came right back. So I still look to focus below 1304. We had support at 1281, and our next downside target was 1270. Here's where I start to look for a little bit more of a support bounce. Now you have a couple of things on the longer term and the near term to kind of suggest that. Longer term, look to the right here. You have the basic 100-day moving average, which we're kind of, we're basically trading below right now, but we want to see what the close looks like. And that's backed closely by the 38.2 retracement, and that's of the entire advance off the December lows of last year. So it encompasses all of 2017 price action. And that's just lower at 1267. So I am looking for a little bit of a blow off here and maybe a turnaround, a rebound higher. Here's what it looks like on the intraday charts. No change to any of those levels. We did bring down bearish, invalidation from 1304, brought it down to 1290, which is the Friday high that we made last week. That converges on basic channel resistance, and that's kind of what we would need to mark resumption of the broader uptrend. But right now, near term, look for a little bit of recovery back towards, wouldn't be targeting anything beyond channel resistance for now. Especially with non-farm payrolls still on tap this week. The whole reason that non-farm payrolls makes me more anxious this time around is because the expectations are so dismal. I mean, they did get revised up from like 70 to 80, but that's still pretty damn low. Questions on gold? Okay, D has a question on or wants to take a look at dollar yen. So D, let's stoke out dollar yen here. So gold was number 8. Dollar yen for D will be number 9. Let's see what Yenski looks like. Pooja says, what's your current bearish and validation level on euro dollar? Good question. I will bring up, oh, I didn't have euro on the list today. I will bring up euro dollar after this for sure. Pooja. Gotcha. So here's what I'm looking at with dollar yen. This is the same thing I had on the update on the intraday charts, guys. If you go and look up the latest dollar yen update, it's the same exact levels. I haven't really changed anything. I'm not really a huge fan of this slope as it stands. I mean, broadly it's all right. It's just not something that's been making me super excited. So I haven't really been doing anything at all here. On the daily chart, it's even messier. If we were to take just basic trendline resistance off the highs for the year, what the heck is that? If we're working with this broader median line formation, what the heck is that? Is that a breakout? I don't have any clarity on this. So for dollar yen, it's tricky here for me. Yeah. This is just my complete random opinion. But from the looks of price action, you're seeing it vulnerable in momentum. This has been ongoing divergence for well over 10 days now, where price action pushed higher and the oscillator has made lower highs. So it looks vulnerable. I don't have a level here. I like to work off of some sort of lateral level that makes sense for why we peaked. Now, this could be a raised ceiling and it's just exhaustion, but even then, it would suggest that you look for a near-term recovery before continuation. It's dollar yen, though. Okay, so put a gun to my head, I would think this thing would spike into here just to satisfy one of my levels, and then rip lower, and you would look to buy a recovery near the median line, if not that lower parallel near 111.46 or so. But yeah, I mean, that's the only thing for me is just near-term price action here is yuck. Or if we were to get a rally into 114.60, I would be interested definitely in fading that 100%. On account of a whole different thing. This is a big, big level on a daily basis. And those are ones I tend to pay attention to. Look at how many major pivots we've seen here all the way back to last year, this year, high close, high stretch, 618 retracement. I mean, you name it. There was mad up there. So if we do get up there in slope, that also gives us a little bit of a target later in the week. That's where I would be interested in possibly looking to fade this move. But from here, it's not my cup of tea. D, does that give you any assistance whatsoever? That's just my humble opinion. What's going on there in dollar yen? He says, think so. Yeah, me too. I am always completely frank with you guys. If I don't have clarity on it, I'm not going to try to BS. It's messy here. It's messy here. And again, the beginning of the month and the beginning of the quarters always have me sketched out. If anything you want to be mindful of, it's definitely dollar yen. Because it's like the prime one that loves the fake outs here in these kinds of environments. I'm long from 112.40. So you have a nice entry. So you're just trying to navigate the exit. I love your target. It's on the inside of this major support resistance region. So I do like it. But what I can tell you, D, is if it starts to break down below this parallel, it's going to probably give you a larger correction. That's going to be below your entry. So, I can't tell you what to do exactly, but in my opinion, I would have that at break even. Why? Well, because if you do break below What's the low here? 112.43. Well, that's a break of the objective weekly opening range low. So that would inherently shift your near-term focus for a little bit more of a larger correction. Okay, so just keep that in mind. Yeah, it might be a little bit better off. D. She was thinking about keeping her stop at 111.90. Wants to move it up to 112.25. I mean, again, I just keep it objective as possible. If your entry is right at or below the weekly opening range lows, I'd have my stop just below that. It's kind of a good break point where things would start to shift, my opinion, if it does move lower. And if you get in the real nitty gritty, you know what I mean? Just keep it as basic as possible. That's your weekly opening range low down there. So it would need to invalidate some stuff. And if it does break that, you're probably going to see some follow through. That being said, look for initial, just a soft target here. 113.57, 113.67 wouldn't be a bad area to take some off. 114.20, you'd be dead on. I think you would get way up here, but 113.20, 14.20 would even be on the inside. So I like it. I like it. She says, thank you. You're more than welcome. My pleasure. Pooja, euro dollar is number 10. Yes. Where would I be without the euro? Here's what euro looks like right now. What is your current bearish invalidation level? Let's take a look. So the daily chart, one of the reasons we were looking to really curb some of the appetite for the bearish trade was this exact region that we highlighted yesterday. Not only do you have the upslope 50 line, which was support, you also have the embedded upslope 50 line down here. Nice convergence. Just below that is a basic 236. So could we still drop into that region? Yeah. The bearish invalidation level for the current immediate downslope, Pooja, I would have, unfortunately, it would be at the weekly opening range high, which is like 118.15. Ideally, it would be above Friday's high, but I don't want to keep stretching it. Let me bring this down to the new low. Divergence in price. Price action makes a new low. Oscillator makes a higher low. Actually, a decent signal. One of the oscillator points below the oversold signal, one of them above, does have this risk for a bounce. So yeah, I think you're right in the idea of starting to look for what near-term bearish invalidation would be, Pooja. Immediate resistance, I would just look for a reaction at the weekly open. But basically, if we break the weekly opening range highs, you're risking a rally up towards 119, 118.99. Ultimately, I want to see this. If we get it nuzzled down into here, might be a beautiful long opportunity. That comes in like later next week, but it would be too clean. It'd be too clean for comfort. That's this spot right here. So you have the 2016 swing high, and then you have the lower median line parallel. Add to that, by the time, in time, if you take time as a factor, you'll have the 100-day moving average nestled right in there as well. So just my humble opinion, but if you're talking about the immediate bearish invalidation at this point on a drop like that for the weekly open, I'd be looking for the weekly opening range high. Does that make sense, Pooja? For euro? Do like a little bit of recovery and a follow through higher here. Just like it would be too clean, to see if the dollar index, as we went over earlier, if it finds resistance and this actually pulls back a little bit deeper, type of false break type of move. Would be a nice kind of move to the downside, giving euro a little bit of a lift, giving pound a little bit of a lift. But we'll have to see if we can't get that pullback in the dollar. Questions on maybe the ABC complete from September high in euro? Possibly. Possibly. Do we not have the extension on there? No, we did have the extension on there. The 100 was well surpassed, yeah. The 100 we broke through here. That's why that yellow mark is there, because we were looking for that as a target on the downside. So if it was just going to be a basic sort of ABC, two equal legs, that would have been a sweet spot with slope to hold. So is this just kind of a messy monthly close, monthly open type of play, Pooja? I don't know. If we pop back through, again, either way, the weekly opening range high seems like a good spot to invalidate the short side. Until that gives out, you're still on the risk for a little bit of a move lower. Should we be even looking for shorts, ABC as in a flat? I'm not really stressing the Elliott count here, Pooja. You know how I trade. I just like to use what we're doing in price action near term. Last month's opening range was a clear break to the downside, so it gave us a bias to look for a late month float. We got it. This month's opening range is taking shape just above a real nice key support level. If that gives out, this is kind of your big bearish invalidation level for the trade, or bullish invalidation level, for the broader uptrend. So for me, early in the table here for the euro, I haven't really touched anything. I want to see if we start to max out through the weekly opening range highs, look for resumption. You'd look for a target back at the median line. If it sinks down lower, not really interested in getting too aggressive on the shorts. I'm not going to really touch that. More so, I'll be looking for that decline to give me better entries lower down. So this is one of those trades where it's just not worth it for me to take a very strong opinion on it just now. I want to see a reaction lower. If you guys remember, we were talking about 117 for a while. And in fact, there was a couple of chuckles over on the public webinars when I was saying that a couple weeks back, because it just seems so far-fetched as we were ripping through 2030. I get it. But here's the correction. We hit 117. I don't want to get too aggressive and chase this any lower. It's been a decent decline. Basic 236 takes into 1680. You know what I'm saying? 1679. So we're splitting hairs now. I don't want to get too aggressive on it. But I am looking for exhaustion of the downside move. I'm looking for a little bit of recovery here in euro. Pooja says, I just booked my last short at 116.98. That was nice. Perfect. Wow. Perfect. Well done. Yeah, that's exactly how I would have done it. I would be out of shorts based on a level that we were in. 117, psychological level. Daily chart showed this yesterday on Daily Effects, and yesterday in the webinar, I even showed you the weekly chart highlighting 117.14 as the swing high from back here in 2015. The slope, the 50 line of the ascent. So I'm 100% with you, and I'm really happy that you did that, Pooja. That's exactly what I would be doing. Any shorts would be closed here. To try to enter a long, you're calling a low. It's too early. To try to enter a new short, well, you're at support, right? So don't do that just yet. Just hold your horses. So for new exposure, guys who are looking for new positioning here, to jockey for something new, wait up. Wait up and let's see how this reaction happens. If we do get a more substantiated bounce and recovery, you might get a better opportunity short back up here. If you get a deeper breakdown, which is kind of my hope after recovery, I'm really looking for positioning on a broader or a stronger, more affirmed position for the long side. So these early sessions, guys, and it's tough, I know, especially if you're someone who trades a lot or they're in front of their platform a lot. It's very, very tough to kind of keep your hands off the trigger. But let the ranges play out. Let price action speak a little. We're listening closely, and I'm sure we'll get some more definitive biases moving deeper into the week here. Pooja says, okay, thanks. You're more than welcome, Pooja. Well done on that. I like it. So that is euro. number 10. Any other questions or trade setups you guys want to review? Feel free to throw them on the message board. A couple of minutes left here. Do want to just draw your attention. I haven't really been following it, guys, and this is not an updated chart. I'm still working on it, but I just want to show you crude. It's very interesting that we're seeing things turn over, but it's also not that interesting. Why? Because 52.40 was such a key level that we highlighted. And it's just a simple retracement, 786 retracement of the yearly range, and basic trendline support, 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 now resistance. Also, the current median line formation we've been working with converged right up there as well. So we highlighted that a few days back. This is kind of a few weeks back at this point. We finally got a big old outside, it wasn't a reversal, but it was an outside candle here that tagged through that, failed miserably, and here we are in the breakdown. So you could see a little bit of recovery in crude back towards the 50 line here. I'm still possibly looking for a drop down to this zone. It's sort of, my opinion, would be a sweet spot to find some support in crude prices. So this is basic trendline resistance off the yearly high and the lower parallel for the current structure that we're trading within. Add to that the 200-day moving average. So a little lower, you know what I mean? A little lower towards maybe 49.55, wherever that 200-day moving averages would be the top end of the zone. Bottom end of the zone would be somewhere around 49.30. So watch that, watch that support level. What does CAD yen look like, please? D wants to take a look at CAD yen. That will be number 11 was crude. 12 was CAD yen. I have no clue. I haven't looked at CAD yen. I don't even think it's on my watch list anymore. CAD yen. No. But you know what? We can bring it right up. Well, let's see. It's been a couple of months since we've looked at this, and obviously we were highlighting this region at 90.95 for a reason. It's the 50% retracement from the decline off the highs we made in 2014. That's pretty sweet. It was also the 50 line of the current operative structure we've been working under the assumption that we're in. Not the cleanest. I'm not a big fan, to be quite frank with you, because the 50 line, yeah, some messy price action, didn't quite make it to that 50 line. We overshot it there. The median line hasn't been all that effective, so I don't really want to stress this slope. Let's see if there's anything cleaner here. To work with. Okay, that looks like something a little bit more interesting for me because you get a reaction off here. The break of the 50 saw acceleration. It was perfect support. And decent on the pivot. Nothing major on the median line, but that would suggest you look for near-term support right here at the former highs for the year, which would converge on this parallel basically over the next couple of days. I wouldn't necessarily stress that anymore. Oops. All right, bear with me one moment. Let's see what this stuff looks like here. I don't want to use those extreme lows, so I tend to go for the last concerted low that we made. I'd rather the target be on the inside. Okay, so the 618, damn, it highlights that same high that we just took off. All right, so watch 88.90. And this is sort of a huge zone that just comes up. That's something you need to pay attention to. Okay. So I'd say watch for support into 89.72. With bullish inval, I'd keep probably at 88.90. Basically, if you break below 89, you're going to see a larger recovery here. Not my favorite scenario. I'd be looking for a pullback to try to play long here. Yeah, you got some crazy divergence on these last two highs just from on the daily chart, looking at this longer term, which does leave it vulnerable. But let's see what the intraday charts look like. Hmm. Yeah, so look, there's nothing really compelling here. This is what I would be looking at if I was, felt compelled to do something. Um, you're setting up a real clean weekly opening range, super tight, just above slope support. So look, at the end of the day, I still think this is broadly, you want to be um, constructive on account of a couple of different things. It's super messy, but we did technically break the yearly opening range here to the upside. Um, we broke that multi-year descending median line formation off the 2014 highs to the upside. Is this a bigger exhaustion for a decline? I don't know. It's the 88.90 mark that would validate that for me. So above 88.90, this region here, I would leave as bullish invalidation. Even if we were to drop into that region, I wouldn't really be too hungry to look for anything short beyond that. If we were to close below that, I think you could get a larger reset towards the 50 line, which converts right on with the 100-day moving average. That'd be a sweet spot. That'd be a move down to like 86.80. But right now, this is a support I'd be mindful of. And a break of the high day close would probably be the reversal mark. And the high day close comes in just pips below that 50% retracement. So still keep it at 99.95. 90.95. There's the high day. All right. Kind of a curveball here, D, but I'll take it. Let's see how this one pans out. It says, looks good. Thank you. Hey, you're more than welcome. More than welcome. I'm always up for a challenge. Let's see how this one pans out. It's interesting just because the start of the week and month has been an incredibly tight range, and I would love that if that range was at resistance or if that range was at support. But it's at neither right now. You're at an incredibly tight range. You still have a little bit lower to get to support. Resistance is still a little bit higher. I want to be up against one of these for the weekly or monthly opening ranges. Looking to long at some stage. Yeah, I think that would be kind of the play I'd want to do too. Just makes sense. Overall, the dollar CAD turnover kind of does call for further CAD strength. So I wouldn't be opposed to that for sure. And like I said, we made a major breakout of a multi-year formation. And we topped the yearly opening range high. So wouldn't be too surprised to see a late year high in this pair for sure. All right. That would be ideal, 89. Yeah, 88.93 into 89, I think is a sweet spot near term to be mindful of for sure. Hey, same to you, D. All right, guys. I'm over on time, so we'll wrap it up there. I will see you all bright and early tomorrow morning for another intraday strategy webinar. Um, not that much data on tap yet to start off the week, but we're just getting cooled off. We're just getting heated up, I should say, rather. And NFP still are looming on Friday. So we'll give you another update tonight. We'll be back on tomorrow morning. Till then, best of luck trading, and I will see you tomorrow. Cheers.